retesting this area up here now, reviewing one of my snippets. Let me put that on pause.
We're out of here.
We see some cross trade up here. 60, the 61s were initiative passive buying. Hit, I should say 60.75 was where the passive selling hit the initiative selling. So we're right here. See this cross trade at 69, 16.79. So we're going to watch this area. This is the area. We'll watch a retest. If there's not much activity and a lot of volume doesn't come in, I would think we would reverse from this area up here. This will be the third time we're testing the B, the F period highs. Okay, there's the B and F period high at 62. We're still hitting the ask. We're now trading right at 62. We didn't get much over the B and E period high, just by a quarter tick, just by a quarter point, tick or two. See high volume node up here for this column. I'd like to see a retest. That's the toughest part of this type of discretionary trading is, to be patient and wait for the retest. But that's what you have to do, otherwise you can find yourself on the wrong side of a trade, and then if you're scaling in like I did early in January, you put yourself at significant risk, carrying 4 or 6 contracts, boom, market's up 3-5 points, and you have a $2,000 loss. That's no good unless you're making really big gains or frequently trading with making gains, and that ratio can be out of whack very easily. So we see the 1644s now, and we just have to wait for a little cross trade here. We'll pause the video while it's consolidating here. Alright, see now the importance of waiting. See, this is the contrast to what I was doing early in January. Even though we had a successful January, we never got a reversal column. This is, remember, is a pullback column. This column looks inside of this column. This column needs 2 more points in the opposite direction of what this arrow is pointing to make a reversal column. In other words, it needs, this arrow is pointing up. The price needs to reverse 3 points or 3 P's, and then it'll create a new column. Here 2 P's, and it'll create a new column. If this clicks to 1, it'll be 1 point, and it'll click a new column. Just for those that may not be familiar with a 5-tick reversal chart. So we don't have a retest yet. We won't have a retest until we get a reversal column. So looking inside of this area, though, we can see a negative delta occurring, which should be the first flag, the first warning sign that this in fact could be an area now of resistance. Okay, now there's the reversal column. Now we want to watch what happens when we attempt to come back to the 63s. Do they initiate to hit the bid, hopefully not too fast, or when they come up here, is there just no volume that brings it back up to this 24 area, this 24.67 cross trade area, and then hopefully you can get a good trade location. So we don't see any activity on the ask. There's nothing happening up here. So you're risking now not to even get filled in the 62s. We're not filled yet, but if it comes back up, so you could take the 62.25, take the 62s. Let's take the 62s, short 2, 62. Now we pop back up, we're retesting this area, our 62s are underwater. Now we need to keep an eye on see what happens. Do we build trade up here, and does it cap the market? Or do we see trade running to the 8 period high? In this case, it's really important. This could be a turning area where previous shorts convert to longs, to buys, short covering. So we want to be very cognizant and understand that our stop loss at 64 is a hard stop, and if we get stopped out, we'll look for an opportunity to get back in. but we don't want to get caught on the wrong side of a short covering rally, especially when I've been looking forward to that rally. So our target is, of course, 60.5 for our first contract. And if I don't see what I'm hoping occur soon, I'm going to get out of this trade like I did the previous two times. We need to see them initiate trade at the bid. We need to see them drive this column down. It needs to come down. People need to sequentially sell at lower prices. And you can see how quick the reversal columns happen. That's why when you have a stop at 64 hard, it can get hit quickly, and then the market can reverse, and then you have the problem of trying to chase the market, and that's no good. See, we don't see any bid activity here, so we are going to get out of this trade and take the 62.75s out. 62.75. That gave us a 1.5 point loss, but that's better than a 4-point loss, especially if you don't see what you wanted to see occur, especially up here in the A period selling tail. We have a positive delta for the day now. 6,200 is the delta. That was different than the last time we were up in the B period and E period. That's greater now. There's more buying bias in the market. So, having said that, we're out of the market. Now, the next point is we want to try to catch a rally if we're going to bust up into the area of the gap on the charts back to the beginning of February. That's the next challenge. So we're going to pause the video and contemplate that. See, we're building good volume here. I wouldn't be surprised if 64 does get hit. So our decision-making process, I think, was accurate to minimize that loss and take less than a 2-point or 4-point loss and reduce that down by almost 70%, 60%, 70%. Now, here's the thought. If all of this volume is occurring two-sided, you might argue that it's passive. The market's being capped. It's not going any higher. That's certainly a valid argument that I've used my entire trading span thus far. But my gut tells me something different. That's the quandary I have up here. I've been anticipating a short covering rally so much the last couple days that it certainly seems to be influencing my judgment as to what this activity is up here. We're just sort of stalling and building volume up here. That usually precedes a move higher if it's two-sided during a time or during a line. We'll just would love to get a retest of an area, maybe down to the 59s to get long. I hate to get long just on this alone. If we got a retracement and saw some cross trade, I would get long in a heartbeat. The only thing you could do up here is if you see this two-sided trade continue over a period of time, 15 minutes, half an hour, whatever that time is, hopefully they'll take the market down to take it up and you can get in. Or buy at the market on a breakout. I don't particularly care to do that, but we'll pause the video and watch the action here. Okay, now the next area, we're right at the A period high, so stop running could be between 64 and 66. This is an area to keep an eye on, and probably the area to make a decision based on if we're going to have some short covering. Let's see if they take any stops out above the A period high here. We're going to have to pause the video because we don't have much time here. We're going to watch to see if they hit the bid. Boy, we see a lot of cross trade up here. Look at the delta. It went from 6,000 to almost 13,000 and the market's not going any higher. That's a sign that the selling pressure is coming in. We're going to take, I'd like to let the market retest itself just a little bit. We haven't even got a reversal column yet. Boy, oh boy, look at the volume. 46 to 42, 25. This could be some stop running up here. A couple points above the 64.75. Now, if this isn't stop running and the market doesn't come back, reverse quickly like it would with stop running, and you see this delta all the way up to 16,000, then you have to say, okay, this is two-sided trade. There's some conversion going on here, and the probability is that we're going to go higher. Now, here's the entry for the retracement coming up. If there's an entry for retracement, I got to stop this video and produce it.